Hi there, welcome to my channel. I am Brittany Flammer. I'm a certified financial coach, the creator of Financial Fitness. Today we have a special guest. We've got a CPA here. He's going to share some tips for how you can save money on your taxes as a small business owner or as an individual. Tips that will help you save money. At the end, we'll do Q&A. I've got a few questions. If you have any questions, feel free to type them in the chat and we will try to answer them. Our guest today is Jeff Badu, and he was born in Ghana, moved to the States when he was 8. He got his bachelor's, his master's in accounting. He's a CPA, founder of Badu Enterprises. He has Badu Tax Services is a CPA firm, and they specialize in tax preparation, tax planning, tax representation, basically all thing taxes. Their company has clients in all 50 states, and he is extremely passionate about financial literacy. Thanks so much for joining us, Jeff.
Absolutely. Thank you for having me, Brittany. Definitely looking forward to a great discussion today. Basically, today I do have something that I want to present, and it's really an example of basically a real estate agent. And essentially what we're going to do here is we're going to show you a scenario of someone, in this case, Brianna, who is, let's say she didn't do any tax planning, right? And what that looks like in terms of a tax liability. And then the second and third and fourth scenario of what happens if we start adding some tax planning to the mix. Her projected income for the year will be $150,000, right? She's doing pretty good for herself. And she didn't really know anything about write-offs or business expenses or anything like that, which we're going to go through today. But basically, that means that her net income, her net profit would effectively be $150,000. Her tax rate between federal, state, and the self-employment, the FICA tax, the Social Security tax, would be 35%. Now, if Brianna was to do things the way that she's been doing it, it would unfortunately cost her $52,500 in income taxes. Scenario B is when we start incorporating tax planning, and this is now we form a legal entity for Brianna. We form an LLC, and the purpose of this primarily is to protect the personal assets. And so when you have an LLC, you're not subject to personal liability as long as you're doing what we call, you're not piercing the corporate veil. And so for Brianna, we taught her best practices on how to manage and maintain the LLC. And then another thing that we did was we taxed the LLC. We elected it to be taxed as an S corporation. S corporations are not subject to self-employment taxes on the profit, the net business profit. All right. And so basically with that, instead of her paying 35% in income taxes, she now pays 25%. We just dropped her tax bill from $52,500 to $37,500. In scenario 3 with tax planning, not only do we have the S corporation, but we're also now claiming tax write-offs. Now, what are write-offs? What are some examples? Well, get this. As a business owner, there are certain things that you want to do in your business to take your business to the next level. All right. So, for example, this cell phone here is something that, Brianna, or that I use in this example to make phone calls with clients. So that means this cell phone device itself, plus the bill, right? The monthly payment, the monthly bill, that is a tax deduction. These AirPods that I'm using to basically deliver this information to you all today, that is business tax deductible. This water that I'm drinking to stay hydrated during this meeting today is also business tax deductible. This Apple Watch that I'm using to tell time during this meeting today is also business tax deductible. The food that you eat with your spouse and your kids, and all of a sudden you start talking business and you talk about what happened today and what are your future growth plans and all that good stuff. Those food items, that meal is business tax deductible. That trip you're about to take to the Bahamas with your spouse to talk, basically to enjoy, of course, but also to talk business and spark business conversations. Well, guess what? that is business tax deductible. So all of a sudden, we dropped from 150,000 profit down to 100,000 because we found $50,000 worth of write-offs. Her reduced tax rate is still 25%, and now we cut her tax bill to $25,000. Here's the finale. We said, hey, Brianna, well, why not buy the thing that you're promoting to them? Real estate. All right. So for Brianna, what she does is she goes out and finds a rental property, a 4-unit, a 4-plex, and she puts down, she knows about this program called the FHA, Federal Housing Administration loan. All right. And that allows her to put as little as 3.5% down payment towards her rental property. We're going to use the 1% rule, makes her $6,750 a month in income. That means 1% of the purchase price should equal or be greater than your rental. Basically, that should be how much your rental income is, right, for the property. And then we're going to be very, very modest and say 75% of her income goes towards expenses, which is pretty high, right? That's pretty high. But let's be very conservative. Let's be very modest. Let's consider higher interest rates nowadays. And so now she has $5,063 in rental expenses. And so that means that she's going to generate, if we take her income, her rental income, $6,750 minus her rental expenses, $5,063. That leaves her with a monthly profit of $1,688. All right. If we multiply that by 12, that is an annual profit of $20,250. All right. This is money she's going to be making every single year, and passive income. Now she's starting to build passive income, but it gets even better. We can now claim a tax deduction known as bonus depreciation of 15% of the property's purchase price in the first year of her owning that asset. And since Brianna is a real estate professional, she gets to use all of this money, this $101,250 depreciation deduction, and offset her profit so that all of a sudden we take $100,000 of profit from her S Corporation business minus, let's say, $100,000 of depreciation deduction in her rental property business. And now guess what? Her tax liability is zero. Now, this is something that we can do for you, right? Maybe you're not a real estate, maybe you're not a full-time entrepreneur, maybe you have a W-2, whatever the case may be. This is something that we can do for you as well, right? If you have a W-2, we can apply some of these strategies for you as well. If this is something that you believe is going to be beneficial for you, or if you remotely think that this is something that you want to at least have a discussion about, feel free to scan this QR code. And yeah, we'll definitely be more than happy to work with you, more than happy to work with your family, your friends, loved ones, anything like that.
So first of all, you mentioned a lot of people are not implementing the tax planning strategies. What would you recommend people do today to start for next year?
Believe it or not, we can do everything that I just mentioned. We can go back in time and do this for 2024, right? I know when we do tax planning, we're planning for the future. However, we can retroactively apply the plan as well. So nobody's ever left out when it comes to that. But as far as 2025 planning, one thing that I would recommend is that if you have a W-2, start a side business, start something on the side that can basically, number one, maybe a passion project or something like that, or it can be something like Uber or Lyft or, something of that nature. Start a side business, a side project, and form an LLC, a limited liability company. What this would do is it's going to start building something. It's going to start building that wealth, that multi-generational wealth. And you're going to have the ability to utilize this as what we call a tax shelter, meaning you can now start flowing some write-offs, your day-to-day expenses, your food, your travel, and everything like that. We can start flowing that into that LLC. So if you have a W-2, start a side business. If you are a business owner, a full-time business owner, number one, please make sure you have an LLC. And number two is start doing some tax planning. Ensure that you connect with a tax professional. We'll be more than happy to service as that tax professional for you. And then last but not least, please ensure you're tracking your income and expenses through an accounting software of your choice. We usually recommend QuickBooks, but I know there's a lot of things out there. But basically start tracking your business income and expenses, start legitimizing your business even more so that when you are starting to claim those write-offs, they look more legit. You have more proof with the IRS. And truly, you're now really in business because now you understand and know your numbers very well.
So earlier on, you talked about keeping business and personal finances separate. Do you need any strategies or any suggestions for that?
Yeah. So number one, when you have a business checking account and a business credit card. All your business income or your client funds should be going into your business checking account. For your expenses like food, travel, laptop, and all of that, use your business card to pay for it. And that way you have a personal budget and then you also have a business budget. The nice thing though with business, when you're in business, a lot of the things that you may consider personal can be really moved and shifted to the business side. And that's the power of proactive, right? Proactive tax planning is that now we can figure out how we turn these personal expenses into business expenses, into business items. And to be quite frank, I always go by this analogy. If it's not tax deductible, you probably shouldn't be paying for it anyway. Right? As you're doing that, as you're separating your finances, use the apps, automate your finances, right? Use the tools like QuickBooks. You can automate things in there and say, hey, every time I go to Starbucks, classify it as meals for me, right? And so you can automate your finances by making things a lot more easier or more seamless, more streamlined for you. And then be aware, always be aware, know what money's coming in, know what money's going out, and make sound decisions based off the results that's happening each and every day.
Have you seen how they do business? I'm not sure what you're asking here, William. I know. So, okay, background, William is doing my taxes for me. And it's been a really great process. I've met with him. We've gone through, he looked at it and said, okay, I think I can save you money from last year's taxes already. And he's already showing me, oh, you're not doing that. And I thought I was doing pretty good. I'm pretty organized. My business is separate. But he showed me things that in addition to what I more than what I knew that we could do to save on taxes. Another question from Peg: are your services nationwide or state specific?
So great question, Peg. Yes, it is. Our services are nationwide. We can work with clients in all 50 states. And so, yeah, no matter what state you are in, we can certainly work with you. And, hope you're able to scan that QR code. Hope you're able to, click that link to schedule. Basically, have the pretty much not even an appointment. It's just a quick questionnaire. The link that I shared, the QR code, is just a 1-minute questionnaire.
Oh, this is something that a lot of people might be asking. Why would I pay for someone when I can do TurboTax, or maybe I qualify for free filing? What would be the benefit of hiring an accountant to do tax preparation?
Yeah, that's a great question. So first and foremost, it's very important to understand the difference between tax preparation and tax planning. Right? Tax preparation is filing your taxes. It is you handing over your documents and we put it in the right place for you to file. Tax planning is what saves you money. So tax preparation is what keeps you compliant with the IRS. Tax planning is what saves you money so that you're putting that extra money back into your bank account. Now, what's the cost of not using a professional? What are the downsides of not using a professional? Is in Brianna's example is $52,500. She could have very well went on TurboTax, paid maybe $500, whatever they charge, to do her tax return for her business and everything like that. As a sole proprietor, she would have been using a Schedule C, which is cool, right? She would have saved a few bucks in hiring a professional. But look at the cost though, $52,500. That's the cost, right?
And I will second this. My husband and I are DIY people, and we're cheap by nature. Like, why would I pay for something if I can do it myself for less money? Mm-hmm. But I told him, I was like, we need to work with an accountant for, like you said, the tax planning. So I've already sat down. William already explained how our trip to Costa Rica this year, how that could be a tax write-off, what I need to do to make it legal and pay less in taxes. So it's already paid for itself. Okay, one more question from B. Myers. What is a two-income marriage deduction? I live in Maryland.
All right. So two-income marriage deduction. Not fully familiar with the question, but how I can answer it is that you do get a standard deduction as an individual. Anybody in America has a standard deduction of about 13,000 plus or so. And so when you're married, it's doubled, right? It's 26,000 plus when you're married for the standard deduction. And that just means that whatever income you make, you can take that 26,000, that example, you can take that 26,000, reduce your income by, so that you're paying taxes on your income minus $26,000 less.
If you would just explain like the process, if someone is like on the fence, maybe should I reach out and have you help me with my taxes? What's the process like?
But basically, how clients typically work with us is you would scan the code, and in just a minute, you would complete the questionnaire, right? Just ask some basic questions, your name, your phone number, email address, W-2, pretty much basic information. And then what happens is that we receive that questionnaire. Within 24 hours, you will receive a response from our team with either a quote for tax preparation. Let's say that's a service that you want to choose, or that's best fit for you. So we'll make that determination, or we'll say, you know what, you're somebody who we need to just do a bit more analysis, right? So we'll meet with you. We'll send you another questionnaire, which is a bit more in depth, but we'll go over it with you, right? You don't have to be the one that fills it out directly. And this allows us to get to see more about the tax planning side, the tax savings, right? How much we can save you. And then we usually ask you for your last 3 years of tax returns to see what opportunities are there as well. So not only will we inquire or we look into the year that you're inquiring about, we will also look into the previous 3 years as well.